Gold's price moved decisively higher in the last few days, reaching a new record high even for a brief period of time. Today we are to discuss the fundamental challenges laid ahead for the precious metal, as well as upcoming financial releases that may affect the direction of its price action. Finally, we will be concluding this report with a technical analysis of gold's daily chart. After the release of a slightly cooler inflation report for April from the US, gold's price was allowed to rise as market expectations for the Fed to start cutting rates rather earlier than later seems to intensify, which in turn weighed on the dollar and thus provided support for gold's price. Hence, a big factor affecting gold's price would be the Fed's intentions. Despite inflationary pressures being on the retreat, Fed policymakers seem uncertain whether CPI rates are returning to the Fed's 2% target. Furthermore, we highlight the release of the Fed's last meeting minutes tomorrow in the late American session on Wednesday. Should the document show that the bank still remains uncertain on whether inflation is returning to its target and is prepared to maintain rates at high levels for longer, we may see gold's price retreating. The crash of the helicopter carrying Iranian President Ibrahim Raisi and his subsequent death on Sunday was a painful reminder of how the Middle East remains a focal point of tensions and market worries. The overall incident at the beginning was shrouded, and it was characteristic that rumors began to spread for a full play before the easing of market worries and the deflation of gold's price in the American session. Yet the situation in the Middle East remains tense, especially given the dire situation of Palestinians in the Gaza Strip and the possibility of a humanitarian disaster being present. We continue to view the situation in the wider Middle East region as a possible factor that could boost gold's price, as it could raise uncertainty in the markets. It seems that the negative correlation of the dollar to gold's price was once again present in the past week, as the dollar index retreated while gold's price benefited. We expect the negative correlation of the two trading instruments to be present in the coming week as well. Hence, we note that any US-stemmed financial releases that could move the dollar could also have an effect on gold's price as well, yet in the opposite direction. Also, we note that since our last report, US yields, despite a roller coaster ride, seems to land a tad bit lower. Gold's price as a non-interest-bearing safe and trading instrument is also sensitive to US yields given the antagonistic relationship with US bonds. Hence, we should see US yields dropping lower, we may see the appeal of the shiny metal being polished and its price getting a boost. On a technical level, gold's price moved higher since our last report and briefly broke its all-time high level at the 2,430 resistance line, yet quickly returned below it. Overall, though the bullish tendencies are still present, as the upward trend line guiding the precious metals price since the 9th of May remains intact. Gold's price action has been respecting the boundaries of the upwards channel it has been moving since the 14th of February, and the RSI is below yet quite close to the reading of 70, implying a rather bullish predisposition of market participants for the shiny metal. On the other hand, gold's price seems to have difficulties in breaking decisively the 2,430 resistance line. Hence, we tend to maintain our bullish outlook, yet at the same time issue a warning for a possible stabilization of the precious metals price. For the bullish outlook to be maintained, we would require gold's price to break the 2,430 resistance line, with the next possible target being set at the 2,500 round figure. Gold bears have started to warn for a possible double top formation being on the works, which would imply a bearish outlook ahead, yet we reject this as premature at this stage. For a bearish outlook, we would require gold's price to break the pre-mentioned upwards trend line in a first signal that the upwards motion is interrupted, break the lower boundary of the upwards channel guiding it, break the 2,355 support line, and start actively aiming, if not breaching, the 2,290 support line. As this report concludes, we would like to thank you for being part of our financial updates. From all of us here at IronFX, we wish you solid trading.